with Palesa and Benjamin.
You know, when we speak about money and relationships, a lot of couples often focus on where the money sits, the joint accounts, the separate accounts, whose name is on what. But what about retirement? Because according to experts, a good financial planning starts with a different question. What structure produces the best retirement outcome for the household? Because even as you grow together, you're going to get to a point where both of you will not be working anymore. And because retirement planning isn't about individual accounts, it's more about coordinating income, managing taxes, planning for risk, and making sure that the plan works, not just when everything goes right, but also when everything doesn't really go as planned. Today we're looking at how couples can structure their retirement strategy to support the household as a whole. Joining us on the line is a financial advisor at Liberty, a financial services organization, Mthuthuzeli Gqweta. Mthuthuzeli, thank you so much for your time. Good morning and welcome to Channel Africa.
Hey, good morning to the Channel Africa listeners. Hi, Palesa, Benjamin. Thanks, and it's good to have you guys back. Happy 2026.
Happy 2026. It's good to have you back as well. We're speaking money once again. And today we're looking at this from a very different perspective. Couples. And of course, when we speak about money and couples, people are like, hey, is this in community or out of community of property? We're going to get to that a little bit later on. But let's first speak about what retirement actually is. I think we all think, yeah, once I stop working, then I must have money. How am I going to live? But what is retirement and how is it generally structured?
That's a very good question, Palesa. I think the best way to put it is it's the lifestyle that you would like to live when you can no longer work due to your energy or due to an age kicking you out of a system, being 60, 63 or 65 from working. So it's you buying the opportunity to live a quality life from that point up until you leave this world. So that's pretty much it. It's you planning for that future. And I always say to people, it's not necessarily always about how much money. It's also about the quality of life, which country you're going to be living in, which dependents are going to be in your life. Because a lot of people just look at money for them, not necessarily the dependents or the people that are looking for them. So it's quite a lot of things.
Mm-hmm. And also, you also have a way of looking at money in a way that is solo, even if you're with your partner. And that's what we're talking about today. What must you be considering when you are retiring with a wife or a partner? How do you think about it and talk through it? Because it's a dual experience when you go through that retirement moment.
No, Benjamin, that's a very good question. And I always start with the statement, happy wife, happy life. And all problems start when there's no money. So when we're talking about the last monies or the money that's supposed to take you to that end point, then it's definitely a structure that needs to be put in place. But people always need to remember, there's not a one-size-fits-all. The key point is the best structure depends on how your household lives and how it earns. So some households are in one country but plan to retire in another. That's something to look at. Many support extended families, and some want to return home, so they're working abroad and want to come back. So you have to kind of first understand your key structure as a household between you and your partner. Then you can start looking at points 2 and 3, which is then the core retirement structures, understanding, okay, if I'm working, and I'm working in a structure that there is an employer-based retirement fund, so a provident fund, a pension fund. Those are quite great as a stepping stone because they force discipline for the employer to do a contribution and for you also. So often employees get free money from the employers, and it's tax efficient for both the employer and the employee. But if we're talking about people across, Africa, where maybe they're working within a structure that doesn't give them that, then they have to understand the profitability when changing countries. They have to know the rules when returning home, the immigration rules. So there's quite a lot of things, your personal and individual plan itself, also in terms of flexibility. we reach an age of retirement, which is basically anything from 55 and above, where now you shouldn't be finding yourself in high debt. You shouldn't be finding yourself buying new property and still going into another 20, 30-year bond when the quality of life has to factor in inflation and you earning an income for that period. So it's quite a lot, but with the right financial planner, with the right support, you can get that structure put together, whether you're in South Africa or anywhere in Africa.
Now, this is a little bit more complicated when we speak about a couple, because as an individual, you might have, you know when your retirement age will be. Maybe you have your own plan. Your workplace has a structure for you, or you have your own structure. But this comes with an assumption that both of you may be working. Perhaps you guys have an age gap, so you might not even be retiring at the same time. And you don't work at the same place, so you don't have the same retirement strategy or plans. How do you merge these things together? It sounds like it's a lot of work to do if you're going to think about this in a couple dynamic.
I think the best form, and a lot of people may shoot me for this, is that there has to be transparency regardless. When we're talking about money, especially future money, there has to be transparency. So couples who tend to want to live together, retire together, also have to plan pre and post-retirement together. So usually having a financial professional, an advisor, to sit down with you and say to you that, okay, you're currently at the ages of 30, 40 or 45, and if you're retired, your desired retirement age is at 65, then we've got a 15 to 20 year planning, projection to look at. And in those milestones, we need to look at what is our liability set. So what do we still need to set in terms of offsetting our debts? What are our goals that we would like to achieve? Maybe there's our dream car or our dream home that we still would like to acquire, and what will that need financially from us? All that planning is important. It's also when it comes to when you job hopping around, very important for people to always remember that your cost to company is not just what they pay you, but also the benefits that you get from your company, your provident funds, your group life. Those things also are very important as a household to understand, because one could be getting benefits that cover spouse and the kids, or one could be losing benefits that don't cover spouse and kids. So there's a lot of things that I always say couples need to come together and, demystify the whole thing about what's yours is mine. If you're going to call yourself a couple, if you're going to be in a marriage, or you're going to be in a long-term partnership, then we need to definitely have that transparency and understanding around our benefits, around our cost to company, and our planning for retirement, because that all comes together when you hit that stage.
All right, Mthuthuzeli, let's take a break. We'll be back.
The whole population of Africa has been shocked to the depth of its soul.
For 60 years, Channel Africa has been the voice that connects the continent, telling our stories and sharing our vision with the world. This year, we mark 6 decades of broadcast excellence.
60 years of stories, sound, and connection.
6 years of African conversations that matter.
This is 60 years of broadcast excellence.
Broadcast excellence, rooted in Africa's heartbeat and looking boldly into the future. Join Channel Africa as we celebrate 60 years of broadcasting. Still strong, still vibrant, and still giving you the African perspective.
Channel Africa.
9 to 12 midday, Central African Time. On the move with Palesa Tau and Benjamin Mushatama.
20 minutes past 11 o'clock Central African Time. You are still listening to On the Move with myself, Benjamin Mushatama, and Palesa Tau. We're having a chat with Mthuthuzeli Gqweta, who is a financial advisor at Liberty. We're speaking about the shared responsibility of retirement as a couple. What kind of strategy should you think about as a household? And Mthuthuzeli, that's so interesting because, as a couple, you're probably going to retire at different moments, different phases in life. The timing, do you think it must factor into the strategy?
Definitely. I can't agree with you more. Yes, you have to. It's like saying, if you want to achieve something as soon as possible, you have to start planning for that. We can't just decide one morning that I'm done and we're going to put the tools down. I can say that a good 80% of Africans don't have a 6 to 12 month emergency fund. So let alone now for retiring. In South Africa alone, 90% of Africans can't afford to retire at their designed age because they plan too late or underestimate the power of compounding. So yes, if you want to retire early, which is 55, because early retirement is at 56, then you got to start planning right now and have multiple streams of income and not rely on your active income.
Mm-hmm. So how do you do that with a partner? In terms of if they are structuring it based on when you are retiring as my wife and I'm the husband, I'm going to retire maybe in 5 years' time.
Yeah. So I think the first thing is first understand what you do have. So if you've got the group benefits, so the pension and provident fund, great. Understand what your employer is contributing and what you're currently contributing so that you can then work out the gap between, how they work it out is with your employer, they will contribute a percentage, normally anything between 5 to 8%, and you will then match that. So typically from your group benefits, you'd be getting about 20% that would be covering your gross income, which leaves an 80% shortfall. And that's where the second phase will come in, where you would then need to have your own personal retirement plan, where if we have to speak about a product, it could be a retirement annuity, it could be a preserver, and that would be money that would help accumulate up until what I call early retirement phase for you to access it.
Okay, now, I hear you, Mthuthuzeli, but I don't want that structure of how you take out the money. I'm just saying, as a couple, what conversation should you be having between the timing? If my partner is going to retire maybe 3 years from now on, how do we have that conversation on what we do with that money?
Okay, so I think first understand what is it exactly that you're going to be doing and needing from your retirement. Let's say if you've got a pot of money, are you going to be taking a lump sum to settle off debts, or are you going to be taking that money and converting it into annuity income? You also need to kind of understand how much income do you need when you decide to stop actively working. Are you going to be relying on other streams of income? Maybe you've got property portfolio, maybe you've got an investment portfolio. I think you just need to have that honest chat with your partner to say that now when the buck stops at me having to wake up and go to a 9 to 5, these are the requirements from a health perspective that I need to cover, medical aid, from an insurance perspective, and just will that work with our household plan? Because that's what you need to be discussing, to say that our budget plan outside of the money is this, but what does the lifestyle also look like? What does the goals look like? That's where I open the statement up with transparency, that you're going to have that uncomfortable conversation with your partner when it comes to now talking about life after work.
Does it matter if you are married, does it matter what marriage structures you have in terms of being able to maybe go to a financial advisor and structure your retirement together? So, for example, if you're married in or out of community of property, are there different ways that would work when you as a couple are planning your joint retirement?
So in terms of your marital regime, in my personal opinion, it doesn't necessarily matter up until there is a misunderstanding and then a divorce decree then steps into play. And then that would then talk about, are we in community of property, meaning we're sharing what we've accumulated, or are we out of community with or without accrual? Then there's a calculation that will take into play. But let's speak in good faith that there's no talks of divorce. We're just living life in the norm. Then your regime doesn't necessarily step into play in terms of how it would affect you in moves. However, when it comes to debt, then it does have a big matter. I always say to people, in today's day and age, if you're going into business or being an entrepreneur, then you don't necessarily want to be exposing your partner to life's ups and downs in the business sense. So in community of property won't necessarily be the most viable vehicle to go ahead with. Maybe you'd look at the ANC with or without accrual, and you can decide in the beginning of the relationship, what are you going to exclude or bring in? And then we can then protect one another from a debt perspective. That's where the regimes will then come into play. But from a retirement perspective and talking about planning for the future, not necessarily. It all just comes between the pre and the post planning, because people's idea of retirement is that a business is their retirement, which is not necessarily the greatest vehicle. You need to have different streams of income, some in stock and bonds, some in pension and provident fund schemes, and then others that could be in assets that are generating income for you. But always remember, you got to be able to beat inflation, not just save, because cost of living does go up.
Should you think about having a joint account during that retirement age? Maybe how to control the finances together as a couple, or do you think keeping things separate is the best way?
One thing I can say, Benjamin, is that a lot of people, when they hit retirement, want to start a whole lot of new things. And new is not necessarily bad, but if you've never done it before, there's a whole lot of mistakes that you're doing when it's your last monies, you're at that sensitive phase. So when it comes to the whole joint account concept, if it's something that you've practiced and you've seen great results in it, then continue with it in your retirement phase. But if it's something that you've lived 60 or 50 years where you had each your own separate accounts and you were managing it according to what each person's household expectation is, then stick to that. Stick to your working formula. I don't think you want to be finding yourself now knowing maybe your wife for 40 years that you've been married to, now in retirement, where you're looking at every penny to the T as a shopping.
To hold them accountable. We can't do as much shopping as we used to do before retirement, man.
Hey. That's where now people start having their own versions that they sleep in, and a whole nother topic for another day. But in short, work with what works with you and what you've been systematically benefiting and growing with. New change will come about only if needed and forced. But if you didn't have a joint account and there was no issues, I don't think there's a need for you to go and start that, especially because that will put you in an uncomfortable position. Not to say that being uncomfortable is not great, because that's where growth happens. It's just, the older we get, the more stubborn and angry we can become. And in a relationship, we want sustainability, not destruction.
That is so true. I will leave it there, Mthuthuzeli. Thank you so much. It is a pleasure to get this money advice from you. And hopefully those out there, even those who aren't in a couple as yet or in a relationship as yet, can keep this in mind once they do. And I think the most important part is actually having conversations, which is most important. Thank you so much for your time. It's always a pleasure.
Thank you so much, Palesa. Thank you, Benjamin. And you guys have a rocking day.
Have yourself a good one as well. That's financial advisor at Liberty. That's a financial services organization. Mthuthuzeli Gqweta, speaking about how couples can structure their retirement strategy to support the household as a whole when that time comes for you to say goodbye to the working world and hello to retirement. Well, it's time to say hello once again to our latest sports news. Let's go there.